All right, welcome everyone. My name is Coach David, and we are here with Eagle Lock, right? It is not going, there we go. Right, back to the first page. It is February 19th. It is 5 p.m., and we are here with Financial Aid Secrets to try to help your family save money. Today, we're going to be talking about protecting your assets and saving in the right way so that your family can both, save for the future and parents, your retirement, and also that you can, pay for college, right? College is getting more and more and more expensive, right? If we just think about, parents, what you paid for your college tuition. I don't know if you guys remember, but it was probably about, I'd probably say 10 to 15% of what it is actually today. Okay. And so we need to make sure that we are getting every dollar out of the financial aid system that we can. Okay. So let us kind of go over an agenda, right? I'll also give you some of the logistics, right? And for those, I do see people kind of flooding in right now. If you can go ahead and put your students' grade in the chat, it helps me immensely to know who's coming and kind of what topics to cover for what grade levels. Okay. So the first thing that we're going to talk about, like I do every single week, is the state of financial aid, right? Ways, and then the next thing I'm going to talk about are ways to help yourself and ways to save in a way that will not negatively affect your financial aid. Okay. As far as housekeeping things, right? Put your grade in the chat, right? Also, if you do have questions, you can drop in the Q&A or in the chat. I will make sure to get to them, okay? Either as we're going through or after, okay? And as far as the replay, if you have friends that you want to show this replay to, or if you want to kind of go over the replay, right, to make sure that you have all the information that you need, right? If you're one of our coaching families in our college admissions program, right, it will be posted on our private YouTube channel. If you are coming from our Facebook group, right, we will make a post about this in our Facebook groups. Okay, so just make sure to respond to that. We will make sure to get you the replay. Okay, now who am I, right? You're probably thinking, who's this guy in this hat, in his Nike outfit, right, that's trying to tell me about financial aid, right? What does he know? Well, let me tell you a little bit about me. Okay, I am a former college and law school admissions reader. I'm a former lawyer, right? I have been sending students to college for the last decade and a half plus, right? I'm on my 16th year now, right? And I have also been able to save families millions of dollars in college expense money, okay? And I want to make sure that I can do that for you as well, okay? But I want to make a very, very clear announcement. If you're a class of 2026, there's no time to be waiting. You need to talk to us now, right? And again, not just me. If you have another person you're working with, you need to talk to them right now, right? Because this kind of like springtime, or I guess it's still kind of winter. It's cold outside, right? But this winter, early springtime is when you need to start preparing your junior for their senior financial aid rush, which is going to be happening starting in October. I'll kind of give you a kind of timeline a little bit later on, and you will understand why you need to start working on things now. Okay. Now, I always kind of start the presentation with financial aid news, right? The reason I bring up financial aid news is because a lot of people aren't searching this stuff on their own, right? I'm probably the only person that is searching up these things, right? And so I want to make sure that you guys are the most well-informed group out there that knows what's going on with financial aid. Now, the points I bring up today, they might seem political. I'm not purporting that kind of like, I'm on any side of the spectrum, right? But what I'm saying is that there are changes that are happening and you need to be aware objectively that they are, okay? So this is not a political battle. If I see any political battles happening in the chat or in the Q&A, I will take corrective action, right? This is just to inform people of the changes that are happening, okay? So one of the things that President Trump kind of signed into an executive order is that in the United States, there are only two biological sexes, right? And of course, I'm sure everyone has heard about the DEI initiatives, that are getting, abolished, things like that, so on and so forth. Now, you might be thinking, why is Coach David bringing this up for the purposes of financial aid? The reason I'm bringing it up is because the form has already changed, right? The one thing that I will say about President Trump's administration is that they take fast action. And the other thing I'm going to talk about today is that there's another piece of fast action that's happening that will affect kind of college in general. Okay. Now, I'm going to show you something here. It might be a little bit small if you're watching on your phone or if you're, on a tablet, or you might not be able to see, but I am I want to show you these two pictures. It's the exact same page of the FAFSA, okay? On the right is the FAFSA from just about 2 or 3 weeks ago, okay? It's a snapshot that I took that on this student demographic page that asked them about their gender. If you look, right, just 3 weeks ago, right, the form said male, female, non-binary, or prefer not to answer. The form has changed. This is from today. Okay. If you look, there's only two options, male or female. That is it. Right. Now, again, there are students that come from all different backgrounds, right? Your student might be non-binary or they might not prefer to answer, right? Unfortunately, in this current situation, you will have to answer this question or you will not be able to move on. Okay. So I just want to let you know this has changed. Okay. That's the first thing. Here's the second thing. Okay. The Trump administration has given colleges 2 weeks to end diversity initiatives or risk losing federal money. Okay. What that means is that racial preferences cannot be a factor in admissions, financial aid, or hiring. Okay. Now, what that means now, or what the language of that kind of executive order has been, right, has been that colleges should only look at merit, accomplishment, and character. That's it, right? Now, again, I'm not on the left, I'm not on the right. I walk the middle, okay? But some people are going to say, well, yeah, that's how it should be, right? You should just look at the kind of character and you should just look at the accomplishments or merit that a certain student has, right? Others are going to say that this discriminates against students that have less opportunities than others, right? Just think about kind of like in your own neighborhood, right? The school where like, all the high achieving students go, right? They have, 17 AP choices, and then the one down the freeway that only has three, right? So again, right, there are challenges ahead for colleges to try to figure out kind of like what makes sense for, their own college. But colleges are going to have to make a hard choice in the months to come, right? It's kind of like lose federal funding, right, for critical projects and research, or, right, they keep the initiatives that they had in place, right? Obviously, there's more to come. I'll let you know how colleges are dealing with it. But like I said, the one thing that we can't say about kind of the Trump administration is that they're kind of like just like dragging their heels. They are moving fast, right? But with those fast changes, one of the questions that I have in my mind is, are they really thinking about all the consequences that are going to happen because of the things that they are kind of implementing? Okay. I will again keep you guys as much as informed as possible as kind of things are changing here. Okay. Again, stay tuned. I'm probably the most invested in this because obviously I'm working with a lot of students that are going to college, right? Um, I work with hundreds of students a year, but for you, right, you're one student. You also need to understand what's going on because it might affect your student very kind of intimately. Okay. Again, if you have any questions as new things are coming out, I feel, I always tell families feel free to reach out to me so that we can kind of talk about them, discuss them, and kind of see what this means for your student. Okay. All right. So I always have this warning at the beginning, right? Again, if you are driving around in a supercar, you probably don't need my help. But for all the other families out there that are kind of just like, hey, we're doing okay, but we would love some help, right? This is a training that is going to be important for you because especially if you have a younger student, you can rearrange kind of assets, you can rearrange how things are done so that you can save more money on college. Okay. But before we get there, quick word from our sponsor, right? Excuse me. As you know, right, we were formerly known as College Admission Secrets. We have changed our name to Eagle Lock, right? Now, a lot of you guys might be thinking, what the heck does Eagle Lock mean? It's just college spelled backwards, right? And so, just like how we help students crack the college code, we want to help you guys also save money on college through financial aid secrets, right? But before we can save money on kind of going to college, we need to get in first, right? So I did want to introduce our college application intensive. It is a summer program for our students, right? It starts in April and it ends in September, right? There are two different parts to it. There is a kickstart and an accelerator, right? The kickstart is to help your student come up with those ideas, right? Come up with their rough drafts, right? And then the accelerator is a more small kind of intimate setting where students get to work with our coaches kind of, in a very small group setting to get to their final drafts. Okay. If you are interested in it, I will have a link later that you can kind of reach out to our team, or you can go to, collegeappintensive.com and then sign up there as well. Okay. We have locations all over California, Northern California, Southern California, San Diego areas. We also do have virtual ones online as well. Okay. Now, let's get back to the training and talk about how to save the right way. Okay. Now, when I'm talking about saving, I am also talking about kind of like saving money, in your accounts, but I'm also talking about saving money for college, right? Or saving money on college expenses. So a lot of these will be directed to how can you put yourself in the best position to get money from the colleges. Okay. For those with younger students, right? And I know a lot of families that do this because I talk to a lot of families, right? They say, oh, yeah, we have a savings account. No worries. Don't worry about it, right? We've been saving up so much money in there, right? We're going to pay for everything. Okay, well, that's great. But there are opportunities for you not to have to use that money, right? So if you are one of those younger families, and I do see them here, 10th graders, right? I see freshmen, I see, sophomores, right? We want to make sure that you have other options as well. Okay. So saving, right? The one thing I will say is that saving money is always good, right? But you have to do it in the right way, or else you're just going to be paying for college out of your own pocket. Okay. The one thing that I regret so much is that I don't know what I know now when my parents were paying for me and my sister to go to private school. Okay. At the time, my college was the most expensive, more expensive than USC, right? At the time, right? It was, I think the total at the end of the year was right around $77,000 a year. Okay. Now, my sister and I overlap by 2 years. So if you actually look at it, that is $150,000. Okay. Now, my parents did what kind of a lot of other kind of parents do. They scrimped and saved and kind of put things in their savings account. And then when it came time to kind of pay for college, they just took out their checkbook and wrote a check, right? But if I had known what I know now, I could have saved them so much money, right? Who knows? My life might have been different, right? But again, that's why I'm here to make sure that you guys are able to reap those benefits. Okay. So the first piece of the puzzle that I want to talk about is income. Okay. Now, a lot of people might kind of like turn off their ears right now because it's like, well, my income's set. Can't really do anything about it. Right. But there are things that you can do. Right. Even people that just get a W-2 and they have an employer and this and that, they're not a business owner, they can change their income. Okay. Now, here are some ways that you can do that. Right. So, again, I know that I live kind of like in the Bay Area, Silicon Valley, in those areas. Right. If any kind of like, tech worker went to their boss and said, I want to take a leave of absence, right? It might not turn out too well for them, right? So I understand, but these are some ways and some creative kind of solutions to try to bring your income down in the year that it is important. Okay. Now, a lot of families, even though I talk about it every single time I have a training, still don't understand the tax year that is important for them, right? So I see that we have an 11th grader here. They will be graduating in 2026, right? I see a few of them, right? If you are a sophomore, your students graduate in 2027, okay? The tax year that they're going to be using is the tax year from 2 years before your student's going to be graduating. So if your student's graduating in 2027, that means they're going to use your 2025 taxes, the year that just started, right? If you are a 11th grader right now, 2026, right? You're going to be using your 2024 tax return. Okay, so that is the base year tax return that will be used. Now, let's talk about the kind of other kind of ways to kind of lower it, right? Now, I know that there's those families where it's like, yeah, we put our money into this stock and it tanked and we're just waiting for it to come back up, but there's really no kind of future for that stock, right? There are ways to take capital losses, right? Lower your kind of overall income because you're kind of taking a loss on that bad investment, right? Also, and again, I know that this is possible for some families and it's not possible for some families. If you can postpone your bonus until after the end of the year, that is going to lower your overall income, right? Again, this is something that a lot of families do, right? Contributing to your retirement funds, right? Again, if you can max it out that current year, that will help as well, right? And we'll also talk about how retirement plays into these things as well. Okay. Now, if you own a business, right? Now, unfortunately, the business types that most people own do not qualify for what I'm about to say. Okay. But if you own a C Corp, a corporation, right? One of the ways that you can lower your income is leave most of the money in the business and take a smaller salary in that baseline year. Okay. So if you have an S Corp, if you have a sole prop, if you have an LLC, none of these are eligible for that, right? A lot of people create the LLC or S Corp or, the kind of sole proprietorship, whatever it is, whatever business entity it is, but they don't necessarily create that to lower their taxes. The reason why LLCs are created or why S Corps are created is for legal liability. Okay, and now you see my kind of like legal background coming in, right? So if you have an LLC and like you build like I don't know, like fidget toys, and like your fidget toy accidentally, cuts someone, right? They can't come after your personal assets. They can only come after your business assets. That's why LLCs or S corps or other forms of business are created so that you can separate out your personal and your business liability. But for tax purposes, it doesn't change anything, right? Your business makes money, it's on your personal tax return. Okay. So people usually ask me, should I change my company to a C Corp? Right? And my answer to you is, are you making enough money to do that? Right? And so a lot of people are like, what do you mean? And I'm like, well, if you have a C Corp, right, there is a 21% flat corporation tax rate, right? In addition to that, all the money you take out as a salary will be taxed again. So you're going to be double taxed on the money that you earn, right? Now, for some people, it makes sense to do that and separate it out, right? But if it's a small business, sometimes it doesn't make sense to take on that extra tax burden on yourself. So keep that in mind. Okay. The other thing I want to talk about in this equation are assets. Okay. Now, the question becomes, how should you hold them, right? How should assets be held? Now, for a lot of families, the answer is, well, my kids don't own anything. I own everything, right? And that's actually a very good thing, right? But I also do know families that have kind of set things up where their kids own things, right? But if you are set up in that way, you need to change that as soon as you can. Okay. The reason is because when colleges are looking at parent assets versus student assets, if it's a student asset held in the student's name, they can grab 20% of it. If it's a parent asset, they can only grab 5% of it. Okay. So it is something very that can change, right? Let's say that there's a home and you put it in kind of trust in a student's name, and that house costs $1 million, right? Well, I live in California. $1 million gets you 2 bedrooms and a bathroom, right? But whatever the situation, that's 20%. That's $200,000 that is kind of seen as something that can be taken for the purposes of college expense. Okay. Whereas if it's a parent, $1 million, it's only 50,000, right? So something to keep in mind there, right? So if there is something in a student's name, you also might want to consider putting that asset in the name of the sibling, right? If there is a sibling, right? Sibling assets are not counted as part of the asset calculation, right? Because it's a different kind of student, right? The kind of other part is trust funds, right? Now, a lot of people set up trust funds or living trusts or this or that, so on and so forth, to again try to protect their assets, right? And also try to get around some inheritance taxes, right? Again, the legal coming out in me, right? But here's the thing, trust funds for the purposes of financial aid are not protected, okay? They can look into your trust fund, see what's there, see what percent or like kind of like who kind of holds what different asset, what the percentage breakup is, and then they can take it. So if you set up a trust for your students and then put, I don't know, a rental house in there, right? Let's say that it's $1 million. You have 2 kids, right? The trust document says that it's 50% each. That means that your student has a $500,000 asset sitting right there. Okay. So it's not safe from the financial aid vultures. I call them vultures because they try to pick away everything that you might be given. Okay. Now, there are non-reportable assets. Okay. Now, non-reportable assets, right? The problem with this is that it's only for particular schools that only accept the FAFSA. Okay. So one of the things that is a non-reportable asset is a retirement plan, right? Most of them kind of are part of this, right? 401ks. I think there's like a 403b, right? Roth IRA, so on and so forth. Most retirement plans are non-reportable, right? So they're considered exempt from parents' assets, right? You don't need to disclose it to colleges because they are non-reportable, right? The problem with this is that the CSS profile right, that is used by a lot of private colleges actually asks about your retirement and what you are kind of what how you're contributing and kind of the value of it. But I'm going to give you a very, very kind of pro tip here. If you don't take anything else away from this, this is the thing that you should take away. For families that have already done the CSS profile, you might have done this or you might not have done this, right? So if you didn't do this, I also talked about this a long time ago too, right? That not everything is kind of a required question, right? But for those that have not done it yet, are kind of like going to be doing it next year or kind of the year after, the one tip I'm going to give you is that the retirement questions on the CSS profile are not required. Okay. So even though they ask you, you do not need to provide that information to them. Okay. So I always tell families this, but you need to give them as little information as possible, right? And get as much money as possible. If they keep asking you for information and keep asking you for information, we have to play that cat and mouse game of, okay, let's give them a little. Let's give them a little. Okay. I don't want to give them this. So let's figure out something else. Okay. That is kind of the game that needs to be played. Okay. The second non-reportable asset is the family home. Okay. The one that you live in if you own it. Okay. This should not be considered in the calculation. So just owning a home does not exclude you. I have heard too many people say, oh, we own our home, so we're not going to get anything. That is not the case, right? The majority of families that get financial aid through our program own their home, right? But again, here's a problem. The CSS does care about it, and there are colleges that look at the value of your home. Okay. Now, are they supposed to? No, they're not, but they do. Okay. And so, again, we have to fight with them to make it so that it doesn't matter. Okay. I had a student last year. They were going to Rice, right? They got an early decision. We turned in their information. The family's income was fairly low, right? But they did have, other, properties. They did have this, right? One of the parents was retired, so on and so forth, right? Now, the family home, when they had first bought it, right? It was about $600,000, right? But the area around where they lived blew up, right? And so their $600,000 investment, 23 years ago, actually was now worth $2 million. What the college actually did was look up their address, right? See what the Zillow value was, right? And so I spent 2 months fighting with Rice to tell them that the value of our home was this, right? It was $600,000. That's what it was, right? And so again, there is a lot of fighting that does need to happen, but if you know how to fight, you should be okay. Okay. I do see a question about a living trust, so let's take it real quickly. Okay. It says, what is in the living trust is not really there until the parents pass away. So why is it the student's asset? Okay. So again, as far as it depends on how it's created, right? So a living trust, right? It depends on the situation, right? So if it's just a regular trust, right, then student asset, yes, because the student should be able to reach out and grab it, right? If it's in a living trust, right, then again, depending on the situation, maybe it depends on how it was created. Not every living trust is exactly the same, right? So the living trust can be used by any person in the family, technically speaking, depending on the kind of restrictions that have been placed on it, right? It doesn't necessarily have to be until the parents pass away, right? So if you have questions about like your particular living trust, please let us know. Either way, it will be counted as either a parent asset or a student asset, depending on how it was created, okay? Now, I also do want to talk about reportable assets. So these are the kind of the reportable things that the FAFSA will ask you about. Okay. So cash, brokerage accounts, CDs, mutual funds, stocks, ETFs, your 529 account, businesses, right? Investment real estate, precious metals, right? A lot of things are reportable. If it's something that can be like that is liquid, that you could technically like make liquid in a quick amount of time, they usually are a reportable asset, right? But what we want to try to do is get these things into non-reportable categories if possible, right? Now, one of the things that I talked about, like kind of, and I had like a big page about it before, was like don't use just savings accounts, right? Here's the reason why. Savings accounts, in my mind, are bad for two reasons. One, it shows that you have a hunk of money just sitting there. So if they ask you how much is in your savings account and you're like, oh, well, I have $500,000 just sitting in my savings account, right? Now, there are restrictions on savings on most savings accounts, right? You can only make 6 withdrawals a year, or like this or that, or so on and so forth, right? There's a lot of different things with savings accounts, right? But that means that you have money sitting in there that you're not necessarily going to use. It's just sitting there, right? The second reason why it's bad is because it has an effect on your tax return, right? So even if, let's say that for like the 2025 year, right? Let's say I had $1 million in my savings account, right? And with that $1 million, I was making interest off that, right? Now, what ends up happening is that even let's say I was gonna, what is it? I lost my train of thought. Let's say that I had that $1 million in my account, and then before I filed the kind of like FAFSA, I took all that money out and I spent it. Okay. I went on a shopping spree, right? And that money was gone. The problem with that is that it has an effect on your tax return because at the end of the year, your bank sends you a little tax slip, right? That says this is the interest that you made off of your kind of savings account, and then here's your tax form, right? So, what do colleges do when they see taxable interest on your tax return? They reverse calculate. Most banks have a similar kind of tax, or like not tax, they have a similar interest rate that they're giving families, right? And people that have money in the bank, unless you have, hundreds of millions in it, right? Then they're giving you a higher rate, right? But for the normal person, they give you the normal rate, right? And if that's the case, they can reverse calculate your interest to see how much money was sitting there. Now, whether it's still sitting there or not is not really what they care about. What they do care about is that you had that money at a certain time in that account. Okay. So something to keep in mind there. Okay. Now, I also wanted to make sure that you guys understand that there's different ways to save that do make sense, right? The first thing I'm going to talk about is a 529, right? Now, I just talked about the 529s and I told you that that is a reportable asset. It's probably not the best way to save, but there are loopholes, right? The first loophole is this, right? Grandparent held 529s. Okay. So grandparent held 529s, it's a loophole that the government gave us, right? It will not be counted against the student for the purposes of financial aid, right? If this is possible for your family, you should use it as much as you can, right? But I brought up this issue with a lot of my families, but there's a very common theme that comes up. The grandparents don't live here, right? But what I have found after much research is that there are certain states, right, and there are certain account types that can be opened by non-US citizens or permanent residents that do not have a social security number, but that will vary by state. Now, unfortunately, in California, doesn't really happen, right? But maybe if you live in Indiana or Wisconsin or Illinois, right, it might be an option for you. Okay. The other thing is this, right? Another way to have a kind of have your 529 not matter is to have another person, right, not related to you, right, have a 529 in your student's name. But there are some technicalities here, right? Now, there's definitely kind of people out there, right? It's like, oh, I have a godmother, right? I have a godfather, right? Whatever it is, right? You guys trust each other, everything's good, right? Then we can actually fund the 529 and have that person kind of do that. But there is a little bit of a technicality here, right? So you have to make sure that the timing is correct. Okay. So first, you need to make sure that you're filing your FAFSA before you receive any money from that other person, right? And the full amount of that needs to be used before you file your next FAFSA. So there cannot be you need to make sure to work out the timing with everyone so that it's never something that is reportable on your FAFSA, right? That way it will never show up on the student's kind of assets as untaxed income. Okay, so that's kind of one piece to think about there. Okay. I don't know I have that. The kind of like the next part is life insurance or annuities. Okay. Now, as far as like life insurance, right? There is a way to kind of completely get rid of your income. So let's say you make $500,000 a year, right? And then you decide, well, I don't need this $500,000 this year, right? Instead, I'm going to put it all into an annuity that I'm going to get when I'm 65. Okay. That gets rid of your income, right? But, right, this seems like such a great loophole. But, right, most families, they need their income to survive, right? It's not like we can just be like, okay, I'm going to delete 1 year of income and then I'm just going to get it later, right? Again, if you're in that situation, you might be in a situation where financial aid doesn't really matter for you, right? But for most families, I brought this up multiple times. I haven't seen a family take this action yet, right? And the reason is because, well, it's expensive to just survive, right? And so, again, this is a possibility. It does reduce your income for that baseline year, but, right, if it is something that is possible for you, maybe you've like saved up enough and you're like, you know what, this is something that is possible for my family, then you might be able to get up to $100,000 savings for college, right? Because private schools are right around that mark, right? And you kind of save for the future as well because your later annuity will be paying out with interest. Okay, so something to think about there. Okay. All right, so quick takeaways here, right? It is not easy to game the system, right? We need to be strategic. We need to be more cunning than the financial aid officers, right? But we will be and we can be, right? If we save in the right way, we can make sure that your family is taken care of, right? It's not just about your student going to college, right? A lot of parents, they don't really think about their future, right? Parents, you're going to have to retire in 15, 20, 25 years, right? And just like how you don't want your students, right, to be living in your basement, I'm sure you don't want to be living in your student's basement, right? So we want to make sure that everyone can live their own lives, have a great time when that time comes. Okay. All right, just a little spoiler for next week. Okay, I'm going to be talking about the CSS profile. Okay, now that's kind of part two to the financial aid kind of process, right? We did the FAFSA. I think it was like last week, right? Now we're going to do the CSS profile and we'll keep moving forward with other pieces of the puzzle, right? Now, I did say I wanted to share this kind of like timeline with you, right? So I always say early bird gets the worm, right? This year, 2024 taxes, right? If your student is a junior this year, you have to get your taxes filed early, okay? This is the timeline. Your taxes are due in basically 2 months, right? So I know that there's people and like, oh yeah, I'm already done, right? And I also know families, it's like, well, I'm not going to be done until November, right? So this year, you cannot be that if you are a class of 2026, right? August, school starts, right? December, everything is done by then, right? And then April, college decisions come out, right? There's not a lot of time left before everything needs to get done, right? We literally have, what, 9 months left, right? But we still have to wait a couple months for people to finish their taxes, okay? So keep that in mind there, right? Now, how can we help? I am always here to answer questions, right? You don't need to be part of our program already to ask questions. I am here to answer them, right? So I don't bite, right? If I can help you, I will let you know. If I can't, I will also tell you that as well, right? But I always want to make sure that you guys are ready or that you guys can reach out to us. So by email, right? I will actually put it into the chat here, right? If you guys have any questions for us, you can email us here, right? This is our new email. It's a lot shorter, so it's easier for families, right? So it's finainaid@eagledoc.com, like financial aid, right? And just make sure to ask the questions that you have, right? The one thing I don't want families to do is be like, "Ah, yeah, well, I know that we're not going to qualify," and then just give up on the process, right? That's not what I want to happen. Okay. Because there are opportunities for every family, right? For most families. And if there's not, I will also tell you very straight up that you do not have any opportunities as well. Okay. All right. Now, again, if you guys have questions about our college coaching programs or about our kind of, college application intensive in the summer, you can text college to 949-298-6234. If you have questions about our financial aid edge program, you can text 949-298-6234. Now, I made this super easy. You can text us, right? I'm also going to put a link in the chat. I also have a QR code here, right? I cannot make it any easier for families to reach out to us and talk to us about their situation, okay? And again, there's no cost for our consultation. So all you need to do is come, right? We'll talk about some numbers and then we'll figure out if it works for you, okay? Now, I am going to offer something special to our families, right? So I'm going to stop the recording here, right? This is only for the people that are here live, right? So if you're there in Facebook or watching on YouTube, right, have a great night, right? And for the rest of you guys, we're going to continue our Q&A and a kind of our special offer in a little bit. All right. So everyone have a great night. I'll talk to you again soon.